Hi everyone. In the previous 3 videos, we began a discussion of periodic pension expense. In this video, we will conclude that discussion. As shown here, Global's pension expense for the year 2021 was $43 million. The expense includes $41 million of current year service costs and $24 million of current year interest costs. The expense was reduced by $27 million expected return on assets, and the expense was included by $4 million amortization of prior year service costs and $1 million amortization of net loss. The journal entry to record pension expense is as follows. Debit pension expense for the total amount, $43 million. Debit plan assets, $27 million for the expected return on the plan assets. Credit or increase the PBO for a combination of the current year service cost, $41 million, and interest cost of $24 million. Combined together, it's a credit to the pension benefit obligation of $65 million. Credit amortization of prior year costs, service costs, OCI, $4 million, and credit amortization of net loss, OCI, $1 million. Notice the only number that hits the income statement is the pension expense. This hits the balance sheet, this hits the balance sheet, and both of these amounts hit the statement of other comprehensive income. Well, I think it's time for a bonus break. These are really difficult concepts, so I will double the normal bonus reward for working through these videos. I will award 10 bonus points to the first 20 students who send me a picture of a really cute puppy before 11:59 p.m. on the due date of exam number 3, which will cover chapters 16 and 17. Let's work another concept check problem. The pension plan was amended last year, creating a prior service cost of $20 million. The current year service cost and the current year interest costs were $10 million and $4 million respectively. At the end of the current year, there was a negligible balance in the net gain pension accounts. The actual return on plant assets was $4 million, although it was expected to be $6 million. On the average, employees' remaining service life with the company is 10 years. What is the pension expense for the year? Is it $8 million? Is it $10 million? Is it $12 million? Or is it $18 million? Please pause the video to give yourself time to do your calculations and calculate the answer. Then start the video again to check your work. The correct answer is B, $10 million, calculated as follows. Current year service cost is $10 million. Current year interest cost is $4 million. Reduce the expense by the expected return on planned assets, $6 million. Calculate amortization of prior service costs, $2 million. That's $20 million divided by 10 years equals $2 million. and it says that the net gain is negligible, so it could not have exceeded the corridor. If it didn't exceed the corridor, leave it alone. Amortization of net gain or net loss is 0. Therefore, pension expense is $10 million. Well, that's all for this video. See you next time.